Jim Rickards warns of perilous times ahead. James G. Rickards is the editor of several different publications, including Gold Speculator, Crash Speculator, Strategic Intelligence, and Project Prophecy. He's a lawyer, economist, and investment banker from the United States, and has worked on Wall Street and the financial markets for 4 decades. As a best-selling author, he has been making economic and investment predictions for a long period of time. And now, he has issued a warning to the entire planet and states that the supply chain crisis is about to turn into a full-blown recession that will affect the entire world. Before we begin, let me welcome you to another video of Finance Sense, where we discuss all of the most recent developments in the world's economies and financial markets. Don't forget to give this video a thumbs up, subscribe to our channel, and click the notification bell to stay up to date with our videos. Now let's begin. Since the 2008 financial crisis, the world has been plagued with economic issues at an uncontrollable rate. The list of countries that are hopelessly in debt is as long as it is frustrating. Thousands of people across the globe are striving to find a way to survive financial ruin, and the warnings seem to be coming more often. Prior to the COVID-19 pandemic, there were signs that the supply chain was beginning to break down. Unfortunately, the situation was rendered much worse by the pandemic as well as the conflict in Ukraine. Rickards asserts, however, that the actual beginning of this crisis can be traced back to the trade war that former US President Donald Trump initiated in 2018. Rickards believes that the conflict in Ukraine is the most severe tragedy at the moment due to the fact that it is extremely relevant on both an economic and a geopolitical level. While this is going on, everyone is worried about inflation, but there is usually a significant backstory behind it. When it comes to one's own finances, according to Rickards, everyone has a PhD in economics. You can figure out your financial situation and whether or not you can afford to feed your family and maintain a roof over their heads without consulting Larry Summers. Inflation is politically toxic for a number of reasons, but one of those reasons is that it cannot be prevented. You can't even sugarcoat it or make excuses for it. During inflation, demand is being destroyed, while conversely, you're handing out more money for things you can't live without. So people get inflation. Nevertheless, Rickards went on to say that the question that he is asked the most is this going to cause a recession? Or will there be a recession in the near future? Yet Rickards has lately asserted that a recession is currently underway in the economy. It's not coming because we're already in it, and data confirms it, he says. As we all know, the traditional definition of a recession is 2 consecutive quarters of decreasing GDP. Rickards argues that based on this definition and the best available estimates for the second quarter, which is likely to be accurate, we are presently experiencing a recession. Despite the fact that it is not very serious at the moment, the situation is only going to become worse as time goes on. According to Rickards, the stock market is still significantly overpriced. The buy the dips mindset hasn't gone away. There is institutional support, and there is still momentum trading. All of this is taking place right now. It's a lot of whistling past the graveyard. On the other hand, the collapse of the stock market that Rickards anticipates, which will coincide with a severe economic downturn, has not taken place as of the moment. Yet he believes that things are going to turn out horribly and that the situation will only become worse as the year progresses. If you listen to market veterans like Michael Burry, Jeremy Grantham, and Charlie Munger, they are all claiming the same thing. And these individuals have been engaged in the market for a very long period of time, and they run hundreds of billions of dollars. Occasionally, someone will throw out a statistic with a time series of 5 to 10 years. But according to Rickards, Jeremy Grantham did a 100-year time series, which was far more significant and examined bubbles all over the world, including the 1929 US crisis, the 1989 Japan crisis, and the dot-com boom. In addition, Rickards is of the opinion that people need to be reminded that the stock market saw a drop of 23% in just 2 days in late October 1929. Yet this decline did not constitute the crash at that time. It was simply the start of the crash. The Dow Jones had a drop of 82% from its highest point to its lowest point, and it took the index almost 3 years to reach its lowest point in June 1932. Now, the Nasdaq is down close to 30%, and the S&P 500 is down more than 20%. And according to Rickards, we are currently in bear market territory. But this is only the beginning. That is not what a full market correction or a full bear market looks like in the face of the kind of recession that I expect. But before we move on to the next part of this video, I wanted to ask all of you guys what your thoughts are on Jim Rickards' perspective on the supply chain crisis. Do you agree with him? Or do you think another event will trigger a worldwide recession? If the answer is yes or no, then please let us know in the comment section below so that we can keep the conversation going and the ball rolling. With that said, let's head back to the video. People, especially the youth, have a hard time wrapping their heads around what inflation actually means for their savings and for the economy as a whole. We are currently putting up inflation numbers that are the highest they have been in the last 41 years. It wasn't until 1981 that the United States saw statistics like these, but Rickards wants people to remember that the inflation rate of 1981 marked the end of a period of inflation that lasted for 10 years. It began in 1968, but it really took off in 1974 and 1975. The year 1981 marked the year in which Volcker was ultimately successful in bringing inflation under control. Yet, according to what Rickards observed, if you look back to the years 1977 to 1981, the dollar lost around 50% of its purchase value during this 5-year time frame. As such, the question that needs to be asked today based on what history has shown is this the beginning of an inflation surge? Is it going to get even worse and last for 5 years, or is it going to be different? Despite this, Rickards believes the situation we're in today is very distinct from the 1970s. The supply side triggered the 1970s, which was influenced by a number of different events at the time. The first major event was the Arab oil embargo in 1973, which was a direct consequence of the Arab-Israeli War of 1973. The price of oil tripled, but it went from $2 to $6 to $12 over the course of the increase. And then in 1979, a second oil embargo took place as a direct result of Ayatollah's victory in the revolution, which resulted in an increase in oil prices to $20 a barrel. Due to the existence of two separate embargoes, the price of oil increased by a factor of 10 during the course of the late 1970s. This is what took place on the supply side, while the second cause of inflation is coming from the demand side. According to Rickards, the cost-push inflation occurs when supplies are choked off, or an embargo, shortage, or natural calamity is happening. It is coming from the supply side, but on the demand side, which is much more psychological and is referred to as the demand pull inflation. This is when consumers have the urge to buy something right away, because they believe the price will rise to the point where it is unaffordable in the coming months. Rickards thinks that we are currently in the beginning stages of cost-push inflation, which is primarily characterized by increases in the price of energy and food. Hi! It appears that you have reached the end of this video. Thank you for watching this far. If you've enjoyed what you've seen, please subscribe to the channel, click the like button, and share your comments in the comment section below. This is Finance Sense, where we help you stay up to date with all the current developments in the financial markets and the economy. Stay safe and look out for the next video.